By now, you've probably heard about Builder AI, that AI startup valued at $1.5 billion that just filed for bankruptcy, and you might even know the story about how this supposed AI company wasn't really using AI at all, just 700 Indian engineers doing the actual work. But here's what you probably don't know. There's another Indian unicorn that's caught up in this mess. It's VerSe Innovation, the company behind platforms like DailyHunt and Josh. And they were allegedly helping Builder AI fake $60 million worth of transactions over 4 years. Now, most of this comes from a Bloomberg report and hasn't been confirmed by the companies themselves, so take this with a grain of salt, but if it's true, this story just got way more interesting. Welcome to our weekly Indian startup news show. I'm Caleb Friesen, your host, and you're watching Backstage with Millionaires. Also, before we jump in, this channel is part of the 01 network by Zepto. Okay, so now let's dive into what VerSe allegedly did. According to Bloomberg, between 2021 and 2024, VerSe Innovation and Builder AI were basically playing financial ping pong, sending each other invoices for services that were never actually delivered. And this practice is called round tripping. Here's how it worked. Builder AI collected around $60 million from VerSe Innovation over 4 years, supposedly for app development and cloud services. And at the same time, VerSe Innovation was billing Builder AI for advertising services. And it sounds legitimate, right? Well, according to the report, many of these services were completely fake. Now, VerSe Innovation's CEO is pushing back hard against these allegations. He claims they legitimately provided $80 million worth of cloud services and received $50 million in advertising services from Builder AI. He's calling the entire report baseless and defamatory, but here's where things get a little bit concerning for VerSe Innovation. Their auditor, Deloitte, just flagged some serious red flags in how the company operates. They found major weaknesses in how VerSe Innovation handles suppliers, approves payments, and tracks expenses. And there's even a 35 crore rupee invoice from a supplier that VerSe Innovation doesn't even recognize. And what makes this whole situation even worse is that both of these companies have massive backing from top-tier investors like Microsoft, Goldman Sachs, Peak 15, and Z47. Somehow, none of these investors raised any concerns about these transactions, and meanwhile, Builder AI is now filing for bankruptcy after admitting they overstated their sales to creditors by 300%. US prosecutors are demanding their financial records, and VerSe Innovation just laid off 350 employees while having to restate their previous year's revenue numbers. Now, this whole situation matters because it highlights how some startups might be inflating their numbers to impress investors. And when you're trying to raise hundreds of millions of dollars, every rupee of revenue becomes crucial for your valuation. And the timing here couldn't be worse for Indian startups because investors are already being a lot more careful with their money in this market, and scandals like this one only make them more cautious. And if these allegations turn out to be true, it could seriously damage trust in the entire Indian startup ecosystem. All right, next up in the news, India is building its own large language models, but according to Abhishek Singh, the CEO of the India AI mission, success isn't going to come from staying local. While speaking at the Excel AI Summit, Abhishek said that 4 startups selected to build India's foundation AI models, Sarvam AI, Socket AI Labs, Nani AI, and Gan AI must aim beyond India's borders. While the government of India is backing these efforts, that support is just the launch pad. Abhishek said that their long-term survival depends on creating models that can compete globally. And at the same time, he noted an interesting shift. Even global players like OpenAI will need to adapt to India. With dozens of languages and regional nuances, international models can't succeed here without localization. And so that's where Indian startups have an advantage. They understand the market from the inside out. And on top of that, Accel's Prashant Prakash thinks that Indian startups have a secret weapon, and that's frugality. While Silicon Valley burns money on expensive AI infrastructure, Indian companies naturally build things cheaper. That cost advantage could disrupt the entire global AI industry. And plus, India has a massive opportunity in voice-based AI because of their language diversity. Prashant believes large-scale AI adoption in education and healthcare could happen through voice, and Indian companies are perfectly positioned for this. Now, speaking of frugality, let's move on to the next news item here, because this Indian AI reasoning model was trained for $499. That's about 43,000 rupees, and it outperforms OpenAI O1 Mini and O3 Mini on mathematical reasoning. The model is called Fathom R114B, and they actually gave it the IITG Advanced 2025 Maths exam. This is from the 18th of May, so the model was not trained on any of that data. This was the first time that it was seeing it, and it actually got a perfect score, and it got that perfect score twice out of 3 attempts. And on the third attempt, it just got one answer wrong. Now, of course, G is India specific, but the company that developed this model, Fractal AI Research, well, they wanted to make this a globally competitive model. And so they also benchmarked it on AMI and also HMMT, that's the Harvard MIT math tournament. And you can see here, it's the green bar in this chart. It did very well. It outperformed O1 Mini and O3 Mini Low. These are both models from OpenAI on both of these benchmarks. Now, Fractal AI's goal in post-training this model was really to prove that with the right methodology, Indian AI labs can build globally competitive models in specific domains on very tight budgets. And it's also important to note that this model wasn't built from scratch. This is a post-trained version of DeepSeek R1 Distill Quen 14B, which itself is built on top of Quen 2.5 14B, but Fractal AI Research's long-term mission is to build state-of-the-art reasoning models in specific domains like STEM and the medical field as well. And you can actually take Fathom for a spin right now on Hugging Face. Fractal AI Research has a free chatbot that you can go check out. And they've also open sourced Fathom R114B's training data and its training frameworks. The entire thing is completely open source because they want this to be as useful to the Indian AI ecosystem as possible. All right, next up in the news, according to Money Control, Zepto is postponing their public listing by a full year to 2026 to focus on reducing cash burn and improving profitability. And according to sources quoted in Money Control, even if Zepto files its draft papers in the coming months, they're not going public anytime soon. This comes after some pretty serious scrutiny about their cash burn. Earlier this year, Zomato's CEO, Deepinder Goyal, claimed that Zepto alone accounts for more than half of the entire quick commerce industry's quarterly cash burn, which he estimated to be around 5,000 crore rupees. Now, Zepto's founder, Adit Palicha, pushed back against these claims, but the damage was already done. Even though Deepinder's estimations might be way off, Zepto's financials haven't improved a lot. While Zepto doubled their revenue from 2,025 crore rupees in FY23 to 4,454 crore rupees in FY24, they only managed to reduce their losses by a tiny 2% from 1,272 crore rupees in FY23 to 1,248 crore rupees in FY24. And what this means is that Zepto is burning through over 100 crore rupees every single month. But money isn't their only problem right now. Just this week, the FDA revoked the food license of their Dharavi warehouse in Mumbai for serious safety violations. We're talking fungal growth on food, expired products mixed with fresh ones, and improper storage. And they've also had to shut down their Zepto cafe operations in smaller cities like Agra and Chandigarh due to supply chain issues. So with everything going on with Zepto right now, delaying their IPO might be a good move at this point. Even the IPO market has been pretty choppy lately, and so going public while burning this much cash with operational issues would definitely have been rough. All right, next up in the news, remember WazirX, that Indian crypto company that lost $235 million in a cyber attack last year? Well, their restructuring plan to return money to users actually just got rejected by Singapore's High Court. And so now they're setting up up shop in Panama. And there's a lot to unpack here, so let's get right into it. After losing nearly half of their reserves in that hack, WazirX proposed returning 52% of what users had lost using their remaining $284 million. Over 75% of their creditors approved this plan, and so it seemed like progress was finally happening. But here's where it gets complicated, because WazirX operates through different companies in different countries. Their main operating entity, Zeti, is based in Singapore, while they serve Indian users through a completely separate company called Zanmai Labs. And these two entities actually have no legal relationship whatsoever. And I know it's kind of confusing, but that's just how they've been running things. And so this week, Singapore's High Court completely rejected Zeti's restructuring plan. And the reasoning here is that since Zeti isn't registered in India, they can't legally restructure debts that are owed to Indian users, which makes perfect sense. The court essentially said you can't fix Indian problems when you're not even an Indian company. And meanwhile, WazirX quietly set up a new company called Zensui Corporation in Panama, and this move is all about escaping Singapore's new crypto regulations that are kicking in this month, which require special licenses to operate. Panama has much more relaxed crypto rules, as you probably know, and so they're hoping for smoother operations there. But the result is that WazirX is appealing the court decision and then also probably moving operations to Panama, while millions of Indian users still can't access their money. All right, now let's move into some quick news items here. First of all, Big Basket has entered the 10-minute food delivery race in Bengaluru, partnering with Starbucks and Tata's Cumin platform as it pilots ultra-fast delivery in a bid to compete with Zepto, Swiggy, and Blinkit. After that, Zerota's CEO Nitin Kamath says that his company is expecting a 10 to 20% dip in its broking business this quarter due to slower market activity, but insists that there's no need for an IPO, reaffirming Zerota's focus on staying private while aiming to become a full-fledged financial services firm by the end of the decade. All right, now let's move to the funding news segment for today's video. This week, Indian startups raised $193 million, which is slightly lower than last week's $217 million. It's also slightly below the trend line, but let's take a look at some of the companies that raised funds this week. The first one I want to talk about here is Bengaluru-based B2B e-commerce unicorn Urdan, and they have alone raised $114 million in their Series G round. Following that, we have a Bengaluru-based company called Stable Money, a fintech startup that's making fixed deposit investing super simple. Instead of visiting multiple banks, their platform lets you compare the book FDs from 200 plus banks and NBFCs all in one place. No need to open new accounts, and they've raised $20 million. After that, we have Gurugram-based fresh vegetables and fruits delivery startup Handpicked. Now, unlike other platforms, Handpicked tries to make sure that your online shopping experience is as close to your offline shopping experience as possible. They let you customize the size, ripeness, and quantity of your fresh fruits and vegetables after you place the order, and they've raised 21.7 crore rupees, that's $2.52 million in their seed round. Next, we have Bengaluru-based fintech startup Spence, which helps businesses to launch their own financial products quickly and efficiently. Their flagship platform, Morph, is a no-code, plug-and-play solution that enables companies to build and deploy fintech services in as little as a month. So whether it's creating a neobank, offering digital gold, or integrating UPI payments, Morph provides the necessary APIs and SDKs to get started without the usual complexities. So for example, if a retail brand wants to offer its customers a branded credit card or savings account, then Spence's platform allows them to do so without building the infrastructure from scratch, and they've raised $1.85 million in their pre-seed round. And then finally, we have New Delhi-based startup Gully Labs. They're trying to redefine Indian streetwear by blending traditional craftsmanship with modern sneaker design. So their flagship line, Gully No. 1, features sneakers inspired by Indian culture, incorporating elements like kanta stitching and rangoli motifs. For example, their Vaita model showcases intricate embroidery and designs that are rooted in Indian traditions, offering wearers a unique blend of style and cultural expression. And they've raised 8.7 crore rupees, that's $1 million in their seed round. All right, that is all the Indian startup news that I have for you all this week. I'm Caleb Friesen, and this has been Backstage with Millionaires. Thanks so much for watching, and I'll catch you in the next one.